I have to tell you, you're being lied to. The question I'm going to be answering today is, are the Canadian banks safe? Is it a good place to put your investments right now? And should you continue on with the Canadian banks with full confidence? My name is Sean.Rampersaud. I'm one of the top mortgage brokers in Canada. And today I'm going to be talking to you about if the Canadian banks are safe to deposit your money into. I've been investing in Canadian banks for many, many years. I hold tons of accounts in my name, my wife's name, my kid's name, you name it. And I was heavily invested in several Canadian banks for many years. Now, what I'm finding is people are starting to move away from a lot of Canadian banks for several different reasons in several different markets. There are companies out there that are specializing in things where Canadian banks are trying to be general about everything. And they may be good for the majority of people, but once you start getting into things like investing, mortgages, that type of thing, Canadian banks may not be the best fit for you at this time. And they have to change. If they don't change, they're going to lose a ton of market share. And that's what's happening right now is the Canadian banks are starting to lose market share. And what's happening is the stock values have not yet reflected all the changes that are going on with the Canadian banks right now. Now, I know for years and years and years, it's almost a worldwide thing that it's known that the Canadian banks are really good. And they are really good. I'm not saying that they're bad, but there are reasons to move away from the Canadian banks. And I think that the Canadian bank stocks are going to reflect a lower gain over the next few years. Now, the World Economic Forum, they still rank Canadian banks as some of the best banks in the world. And the most stable, because Canadian banks do have very strict regulations on lending and strict regulations on overall bank practices, which keeps them pretty safe and secure. Now, during the last global crisis, which was in 2008, the American banks, they went downhill. Their stocks were worth nothing. Some of them were bankrupt. Other ones needed bailouts. The Canadian banks didn't actually need any of these bailouts. But let's talk about 12 of the factors that are affecting the Canadian banks moving forward in 2025. Number one, online banks are taking market share. So there's all of these online banks, new ones that have popped up. There's companies like Wealthsimple, Neo. There's a whole plethora of Canadian online banks. And basically what these companies are doing is they're sourcing a lot of funds and insuring the funds through regular Canadian banks. However, their fees are lower. So, for example, I use Wealthsimple now. I moved away from Scotiabank for my investing and moved away from TD for my other investing. I also moved money out of RBC Wealth Management to start investing with Wealthsimple. Now, the reason I did it is that their trading fees are some of the lowest in the market right now. And they've created an app that is just so simple to use. They have bots for reoccurring buys, you name it, it's there in those online profiles. Whereas Scotiabank, TD, BMO, RBC, they kind of overcomplicate things sometimes and their fees are much higher. The other thing I've noticed with moving over to one of the online platforms is that their account fees are lower. So as an example, I got a bill the other day for my business account, which I carry with Scotiabank, and it was $70 for the month for a business account. It's unbelievable. So I started doing some more research into some of the other accounts. And basically what's ended up happening is I've got fees from almost every single account I have, whereas Wealthsimple, Neo, some of those online platforms don't have any monthly fees for that. So then why would you stay with a Canadian bank? Like, what would be the reason to stay with Scotia or TD if it's just so much cheaper to bank through one of these other online platforms? Well, it could be because you want stability. It could be because you don't feel your money secure. However, the online platforms are very secure in that they are insured as well, so that if for whatever reason the company goes out of business, who knows, whatever could happens, your money is insured with those smaller banks. So that's not enough of a reason to stay with the big banks. Another reason I think the Canadian banks are losing market share is that there are investment companies out there that are super aggressive, that are going after investment type people. So people with large funds in their accounts, and even people with just moderate funds in their accounts. These companies like Edward Jones or Hub, they are going after people directly with investments, and they are guaranteeing a higher rate of return. So your Scotiabank account or your TD account may be offering you a rate of return on a locked-in GIC, let's say, of 2.5%. These online companies are guaranteeing 3.5%, 3.75. Wealthsimple is doing on a basic cash account. So significant increase in the amount of interest that they're paying out to their clients. Now, I've even been in the position where I've had a good chunk of money sitting with RBC's wealth management. And what ended up happening with that is the advisor had sold me on the idea that I should be investing with their wealth management division to get higher rates of return, that type of thing. And I gave it 10 years and the rate of return was extremely low for me. So I took my investing on myself and I started investing it directly in wealth management. I started investing directly myself through Wealthsimple in some ETFs and some regular stocks, that type of thing. And my gains started increasing because I was just paying more attention to it than the advisor who said that he was going to pay attention to it. I then looked into my Scotiabank accounts and what I've invested over there. And my advisor did not move my money around hardly ever. And what they had it invested in were things that were having an annual rate of return of 2% and 3%. I could have got that in a cash account with Wealthsimple. So I wasted 10 years of investing on trusting these regular big banks who didn't really care as much for me. That's the way I felt about it. And I think these things are going to have to change with the big banks. I think they are going to need to create a more personalized approach for people so that they feel special. They feel like their money is doing something in those banks and that there's a reason for you to stay. Next is alternative mortgage companies. So 40% of the Canadian economy is run on real estate. It's absolutely huge. So the banks are invested heavily in real estate, but what's ended up happening, you may or may not know this, is that there's tons of investment mortgage companies out there. Companies like First National, CMLS Financial, MCAP, or some of the big names that we can talk about, RMG Mortgages, even some credit unions. So there's credit unions in every province, like Service Credit Union, Alberta Treasury Branch. Even these companies are all taking market shares from the bank. And like I said, it hasn't reflected on the bank's stock yet. The bank stocks have just been seeing rises, and I think that it is going to come down. So if you're looking for a short position, the banking industry could be a place that you may want to invest your money. However, this is not financial advice. I do want to be very clear on that. This is just me looking at reality and looking at the overall scenario and sharing my opinion with you. But so please do not take this as financial advice. Obviously, a global financial crisis could affect the Canadian banks. So if globally the banking market is going down, then obviously the Canadian banks invest in the overall global market and revenues can be hit because of that. So you talk about war, you talk about financial crises. I mean, we had a COVID financial crisis that was a big mess. So anything can happen at any time, and a global financial crisis could happen and affect the Canadian bank stocks. Right now, the Canadian market, real estate market, is pretty inflated, I would say. I mean, we have cities out there that the average home price is over $1 million. It's crazy. So I think based on that, if there was a housing crisis, that the Canadian banks could get hit pretty hard because they're heavily invested in Canadian real estate. Which brings me to rising interest rates and a potential economic recession. So if you do see an economic recession happening, I know Trump just came into power in the White House, but if there is any repercussions, war, who knows what it could be, they will affect the Canadian banking market. Now, obviously, cybersecurity is becoming more and more of an issue. I really hope these banks are protecting themselves, but if they're not, then cybersecurity could be a major issue for a lot of these banks. Now, your money's insured in the banks so that you can feel comfortable and safe that the money that you put in is what you're going to get out. However, if there was a cyber attack on one of the banks and their security levels weren't high enough, then it would definitely affect that bank's capabilities of returning your money in a timely fashion. The next one I want to talk about is bad loans, risk management, like credit management, and weak management decisions. So if a bank is over leveraged and they start giving out loans really easily, like, many industries want them to. Obviously, the mortgage industry wants them to, the vehicle industry wants them to, commercial industry wants them to. If they lax on any of their rules and regulations, it could hit them really, really hard. So I definitely want to make sure that the banks are not giving out money freely to people. And lastly is overall public confidence. So myself, I have lost confidence in the banks for many reasons. Like I said in the video before, number one is my rate of return on my investments. Number two is the rate of return on my cash accounts, GICs, mutual funds, ETFs. Are all higher with these online companies. Next is mortgage rates are lower through some of these mortgage companies. Investments pay out higher at some of these outside investment companies. So why do I need to go to the bank? I would go for security if I felt like the bank was the most secure place to be, or just the norm. Now, I find a lot of people are losing confidence in the bank. And the overall banking system in Canada, which is totally over time going to weaken the hold the Canadian banks have on us. And I think a lot of people are going to move away from the Canadian banks because of this. Now, that being said, I don't want to totally discourage you from staying with your Canadian bank or going and opening up accounts at a Canadian bank. Just make sure you do the research first. I think the banks are going to have to change with all of the changes that are happening in society. They have a lot of overhead. They've got overhead in branches, employee overhead that may be more than what they actually need. So all of these things can tighten up and the banks can change, but they do have to change at the pace that these online companies are changing at. And I think they definitely have to put a little bit more effort in retaining the customers they already have. Like, as an example, if they were to called me up and said, Sean, I noticed you're paying a lot in fees, then I would have probably not moved away from the bank. Or if an investment advisor would have called me up, once a year at least and said, hey, there's this investment opportunity, or I think we should move this over here because it's not doing anything, then I think I would have probably stayed with the banks. But I didn't get that level of service because, I just feel like I was just a number. So what happens if the bank fails? Let's say your bank goes bankrupt. What happens? So the Canadian Deposit Insurance Corporation is an insurance company that is covering the bank's money. So if the bank does go bankrupt, your money is safe up to $100,000 in most cases. Some banks have up to $500,000 in coverage. So their insurance company would cover any losses for you. Have the Canadian banks ever failed? Yeah, the Canadian banks have failed. In 1980, there was 2 Canadian banks that went totally bankrupt. It was due to mismanagement. It was due to overspending. It was due to a lot of the factors that we're seeing today with some of these Canadian banks. So they can go bankrupt. Now, the Canadian banks do have billions and billions of dollars. I mean, it's pretty high security. A lot of them are in other countries too, not just Canada, like Scotiabank TD, for example. They're in the US. They're in the Caribbean. I've seen Canadian banks in Asia. I mean, they're all over the place. So Canadian banks are still strong, but they could potentially go bankrupt. Who knows? How can you protect your money? So I think the best way of protecting your money is diversifying your assets and diversifying your investments. So you don't want to leave all your eggs in one basket with one Canadian bank. You may want to have some money with one of those online platforms and then some money with a Canadian bank, maybe some money with a credit union, that type of thing, so that your money is kind of in pockets all over the place. And now as far as the investments go, you want some in real estate, you may want some in mutual funds and ETFs, you may want some in foreign currencies, who knows? But as long as you're diversifying your portfolio, I think that's the safest bet so that you can retain your money. Now, some people have asked me, are credit unions safer than the Canadian banks? No, the credit unions are not safer than the Canadian banks. The Canadian banks are federally regulated, whereas the credit unions are regulated by province, like provincially regulated. So there's more coverage with one of the big Canadian banks than any of the credit unions. However, there are some credit unions that are just absolutely fantastic with lots of money. Definitely, if you have any questions about those, please give me a call anytime. Overall, the Canadian banks are some of the safest banks to put your money in the entire world. So this video was not to deter you from dealing with a Canadian bank, only to make you aware of other things that are out there, and also maybe to create a little bit of push on the Canadian banks to try to keep up with some of these investment companies that are out there, or some of these online banking platforms like Wealthsimple and Neo, whatever it might be. So I definitely think it's still safe to put your money with a Canadian bank. Are you going to get the best service? You may have to push really hard yourself for it. And I definitely think that it is worth it to try out some of these online companies like I have. I've been seeing higher rates of return. I've been seeing lower fees, a lot of things that are really good. It's putting money into my pocket, and that's what you want to get out of your bank. Thanks for watching the video. Please like and subscribe to the channel. And if you have any questions, please comment below. Thanks.